Hello and welcome to ET Now Startup Central, India's first and only daily show dedicated to startups, technology and entrepreneurship. I'm Chandra Shrikant coming to you live from India's startup capital, Bengaluru. And let's start then with an exclusive panel that we have put together for you, an initiative pioneered by Facebook and BCG to really understand the future of payments in India. Now, they've come together to really study where India is as far as digital adoption in financial services is concerned today and where it will be in 2020. They've given some, big projections. They expect 250 million users to really be comfortable with online banking by 2020. And they've also spoken about how it's a tipping point as far as mobile internet users are concerned. But remember, larger concerns remain because post-demonetization, a lot of people have again started using cash. So is that sustainable? And what about policy enablers like Aadhaar and India Stack? Is there concern that it could infringe on one's privacy? These are some of the larger concerns. But listen into this conversation that the who's who from Facebook, BCG, the world of banking, insurance and fintech had with ET Now's managing editor, Sandeep Gurumurthy.
I personally believe that the 3 Ds relevant to the disruption in payments, disruption in financial services are very intact. I think the demographics are so conducive. Definitely the deregulation and the space, particularly in the digitization space. And the third factor, the third D, which I believe in, that the overall digitization and digitalization process in the whole country has picked up fantastic momentum. And if you add to that the India stack, the public stack, the public stack is very well configured because most of all it's frugal, it's affordable, right? So whether you look at UPI, whether you look at Bharat QR, whether you look at even the Aadhaar enabled payment system or the Bharat Bill Pay system. So I think that's the second factor because we have to analyze what are the conducive forces. And thirdly, I believe that the recognition and understanding in India, and I speak for financial services, of what's happening in the IoT space, what's happening overall in the context of artificial intelligence, machine learning, in the overall context of the way the system is moving, like blockchains. For example, we did a blockchain transaction, the first one in India on 2nd of January with Bharat, with Bajaj Electricals and with IBM Watson. So my point being that there is a convergence in all of this, and there is a market, and the tailwinds are so strong for us to move rapidly forward.
Right, tailwinds are strong for us to move rapidly forward. Among 3 key drivers for what's going to be a sort of transformational growth that we're going to explosion, so to say, over the next 3-4 years, what do you think are going to be the 3 key drivers of this?
So I think when you look at it, one is connectivity, right? I mean, it's great to say that India has 400 million internet connections, but on the flip side, 70% of India is still not, crossed the chasm on the digital divide. So you still have 800 million Indians or 900 million Indians that do not have access to the internet, right? So I think connectivity, because we're all talking about India One, SECA, B, urban, who lives like anyone in the US, right? Rides an Uber, orders from Flipkart or Amazon, and really is served by the products that we are talking about today. Sure. There is an India 2 and Tier 2 and Tier 3 that's aspirational. There is an India 3 in rural India. So I think connectivity is going to be absolutely key. The second part of it is going to be education. How do you get people to adopt? One part is getting UPI and the stack out there. The other part is to get mass adoption going, right? And I think the third part is to use the mediums effectively. I find that a lot of times there's schizophrenia around using a particular medium to reach out to audiences when audiences aren't available there. So if digital is going to be the most ubiquitous medium, then we got to put our muscle behind that entire piece. But I think over time, the complexity in the underlying plumbing that these organizations need to deal with is tremendous, right? Because they've grown organically over time. They're serving different audiences, whether it's credit cards, whether it's liabilities, whether it's loans, whether it's insurance products, or new innovation around payments. All of this is new, right? And to have the ability to get that single view of the customer and drive that personalized communication basis data and signals is going to be the differentiator in the long run.
Alok, how do financial institutions build stickiness among users? Because that's going to be critical, right, for us to sort of get to this sort of growth. Ability to build stickiness among users. Do they have it inherently? Is that capability that they need to acquire?
No, so I think financial institutions so far have done a fairly good job of building stickiness. I don't think there is a problem with that, right? I've been with my bank for years, right? The same credit card, the same insurance company. So I don't think the problem is in stickiness. I think the problem is customers don't like to interact with their financial institutions. Right?
That's not a good situation.
And I think there's a reason for it, right? Because my financial needs don't exist in isolation. My financial need exists in context of my business need, or as a consumer, what am I looking to consume? So I think we are underestimating the digital opportunity when we look at it as a medium for reaching out to customers. I think that is the delivery mechanism. Yeah. Banks will get unbundled into services that belong where they need to, right? Working capital finance is going to sit on a business transaction, not inside a bank, right? Facebook is not going to be the best way of reaching out to customers. It's going to be the best way to deliver banking to customers. So I think that is the gross underestimation in my mind, and that's the lever which in my mind takes these numbers to a very different scale, and to me the only potential disruptor, right, in the whole equation is reimagining experiences that customers will have, and where will they want to have that.
We will talk about capabilities and reimagining customer experiences. I do want to tell this wonderful audience that we will be taking questions from all of you in a short while from now. This program is live on the ET Now Facebook page, and we're going to take in questions from all of our viewers as well, logging in to that telecast on our Facebook page as well. But Bhargav, you agree with the point that Alok was making about reimagining customer experiences, and inherently are banks doing enough of that? And that's something I want to touch upon in greater detail as well.
I think Alok is bang on. I mean, what the current medium is providing as an opportunity is to think about what the core needs of customers are. I mean, talking about digital for customers. The digital is beyond just customers. There's a lot of things that you can do if you think about, what you can do with digital. But just staying with that point, if you look at, our products, like let's say auto insurance, our bank, auto loan. I mean, a customer doesn't wake up in the morning thinking that I want to buy an auto loan, right? Or I need to get an auto insurance. They think of, which is the best car to buy? Why do I think this is a car that is good for me? What is the cost of this car? How do I finance it? If something happens to the car, what do I need? Those are the secondary questions.
Sure.
And I think there is an opportunity, and you're seeing this in China, nowhere else really, as far as I know in the world, of companies which is looking at this at a platform level, right? So if you look at as a financial institution group in a partnership with, let's say, a car portal, if you can partner together and say that when the customer comes on the portal, let's understand what he or she is wanting to do. Can we seamlessly align our offering with what the customer is demanding? I think there is a much bigger, potential to create love for your product. I think the point that Umang was making, and I think so to that extent, Alok is absolutely bang on. But when we look at our segments of business, I think there are certain, I'm sorry to say this, but there are regulatory challenges to this. And we can partner, no doubt about that, but there is actually an opportunity, which is the point that I was about to make on China. It's actually happening in China, where financial services institutions are building those platforms. And in India today, that's probably not possible for us, but there's a scope for partnership. The other thing that I would want to add upon to what we've talked about is certain segments of business which in the past was possibly out of access. I mean, there is a set of customers who we can reach out in a much better way as we are, talking about. But there's a segment of customer that we couldn't touch. I think this is providing, digital is providing an opportunity to touch those customers. I mean, we talk about 300 million smartphones. I mean, that's more than the number of insurance customers in the whole ecosystem, right? For all the companies together. I mean, you look at the number of two-wheelers that is being sold. We believe less than 10% of the two-wheelers after 2 years have an insurance. Why? Because no one is providing that product to them. Digital provides you an opportunity of reaching out to those customers in a cost-effective manner and expanding the market. So there are a lot of other plays that come out beyond what we just talked about.
The thing about this report is, and a lot of these reports is you always look for the headline. As a journalist, you sort of, focus on the headline. And in this case, probably it's the bottom line as well, which is $3.5 billion of money that could sort of pluff back into the profit pool. Arijit, is that, obviously it's a startling number as we sort of looked at it, you were like, where is this money coming from? But what do you make of it? $3.5 billion, do you see possibility for that sort of savings over the next 4 years?
Absolutely. The number may just be a number, but what it possibly indicates or is trying to indicate is that there is a huge, huge opportunity. And I think when we talk of digital and we discuss, I think digital, IT, that these are core elements of any service. It's not just financial service, it's understood by anyone, right from the person who joins a company to the person who is at the helm. Now, one very interesting thing which came up in the earlier presentations by Umang and Amit is that at what stage are we in adopting and delivering? And in that, I think the only thing that will make a difference is customer. So that number of 3.5 billion will depend on how effectively the companies, whether it's an insurance company or a bank or any other company, is able to service the actual need of the customer in the way that he or she wants it and do it in the right manner. Absolutely, the way we can...
Yeah, let me get a word from Rajkaran as well. $3.5 billion opportunity. Is there a conscious recognition of that opportunity? It's great for us to sit in the panel and discuss and talk about it, but is there recognition in the industry that that is how big the opportunity could be over the next 4 years?
Yeah, if you talk of awareness, it is there across the industry today, particularly in the banking, like we talk and we get presentations every day on this. There is a lot of disruption happening, and we are aware of this, and we also recognize the potential available in this. If you have seen the banking space, a lot of tie-ups are happening with the fintech companies across, the new financing models are emerging. Even the regulator is talking of the new financing models, which are unheard of. But if you really see this money what you are talking of is looking after creating a new customer base. But if you look at the existing customer base and the information which sits on my server, even that we are not tapped, because we also have an insurance company. I have not tapped even 0.5% of my customers. So just imagine the kind of what data analytics can do and information mining can happen. And if we can cross-sell to this section, it is huge. Even this money what you are talking of is very small, according to me, and it is much bigger than that.
Is there enough of financial upside for you to pursue the digital story?
So Sandeep, very well phrased. All I can say is that this is not a 250 million, it's a 1.3 billion opportunity, right? And the fact is the banks today are suffering from what I call the single biggest risk of obsolescence. Number one. Number two, banks are suffering from a second risk, which is indecision. Because if they do not make up their minds on digitization, as in like process management and creating far more efficiencies on tasks and QA, so on and so forth, and creating digitalization, to me, it's more about customer acquisition and service. So I compartmentalize these two things. I think this is an area which is the highest risk in assessment of a bank. To come to the more material issue, what I personally believe that banks today in India have to think that they are basically technology companies and they happen to be in the primary business of banking. This is the way I try to evangelize the cause in our bank, because we are still very young, we have entered our teens, so we can do the refreshments and we can do the benchmarking literally every year, and we have access to the world's best who are sitting here and some in the audience to be able to get the ideation going. But the fact of the matter is, it's a no-choice deal. We have to move, and the CIO can do what he wants, the CTO, the CF, whatever. This is the CEO's job. To me, this is as important as credit risk management, the technology risk management, as in an opportunity, and not only to fortify, but to make that into a business opportunity, honestly, is the need of the hour, and this is how I and my team at Yes Bank are functioning.
Fascinating insights there. In fact, fintech is something that we have been focusing a lot on in the last year on ET Now Startup Central. We will continue to do that because those projections are something else. So many million users using digital when it comes to financial services by 2020. But away from that to the other big story that's really making waves, not just in Silicon Valley, but among startups and entrepreneurs here as well. We are talking about Uber's co-founder and CEO, Travis Kalanick. Remember, we got you extensive coverage last week when he decided to step aside and take an indefinite sabbatical after the recommendations of the Holder report came out that really outlined the kind of workplace and culture, the toxic culture Uber had. Now, today, in another turn of events, Travis Kalanick has decided to resign as CEO after pressure mounted from at least 5 investors in Uber who said that his position will be untenable. So Travis Kalanick, in fact, in a statement has said that he's decided to step aside so that there is no further distraction for Uber. To really get a sense of what this means for other startups, for other entrepreneurs, we're joined by Ravi Gururaj, the head of TAI Bangalore. Ravi, thank you so much for joining us on ET Now Startup Central. What was expected, unexpected, and does it change anything? Because Travis Kalanick still retains his board seat, he retains those crucial voting rights he has. So, what really changes on the ground?
Yeah, I don't know that, sitting this far away that all of us know what exactly is happening, but other than what's been told to us publicly, right? I think, clearly there needed to be some distance between Travis and Uber. I think the cultural issues that have come out now in public and probably have been festering for some time probably were hurting the company's progress, right? Clearly. And I think, it just probably became untenable for the board to, at least not have a clean break at this point, I think, clearly Uber is Travis's company. It's, he personifies the company, and he's been driving it relentlessly for the last few years where it is today. So I'm sure this will be a huge inflection point, right, for Uber worldwide, and we'll have to see where they get.
Right. Ravi, do you think this is also a wake-up call for boards in India, entrepreneurs in India, who perhaps don't take culture too seriously and, this bro culture is just festering in so many of these startups? So is it a wake-up call for the ecosystem per se?
Yeah, I think, listen, we don't want to have at any time anything that is, either a demeaning, a hostile environment, right, in any company. And I think maybe sometimes, we tend to ignore it if growth is there and, at least the perception of impending success overrides some of these red flags, right? I think to that extent, I think this will definitely sensitize boards across the world, not just India. I think that, they need to be very careful about culture and, maybe do an audit check of where they are.
Okay, Ravi, on that note, thanks so much for joining us on Startup Central. We'll have to see how this pans out and more importantly, what impact this is going to have on India, considering Uber competes very heavily with Ola in the market here. We don't know what's going to happen here, but for now, at least, a lot of uncertainty as far as the leadership crisis in Uber is concerned. We'll take it then to the last story on Startup Central this evening, and we are talking about an acquisition that Quikr's made. They have acquired blue-collar job site Baba Job. Now, this was in the works for some time, and it came after Baba Job unsuccessfully tried to raise a fresh round of funding. Now, this is Quikr's, I think, 11th acquisition in the last couple of years. They've really been on an acquisition spree, and in most of these cases, it's been an all-stock deal. Some of them have been distressed buys, but Baba Job is the latest. The founders of Baba Job will move on. They will not have any role to play in Quikr, and they will in turn become shareholders of Quikr. So that's Quikr really trying to strengthen its classifieds business, particularly blue-collar jobs. That's something that Baba Job specializes in. But on that note, we come to the end of this edition of ET Now Startup Central. Thanks so much for watching.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNow Live. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.